The leading ASX iron ore miners are up between 8 and 28% over the last month, and that period includes the 20-odd% drop in the commodity itself of iron ore. It fell from over $220 a tonne down to $180 and then has now rallied back over $220. We're looking at the top 6 iron ore miners because this is Finer Market Points, where we link the leading market thematics and the top performing companies for better trading. You can like the video to support the channel, click subscribe for updates, and comment below to let us know which iron ore miners you're trading in. Now we're moving over to have a science lesson or a chemistry lesson about iron ore and also look at the commodity price itself. We always start this period with looking at the commodity price that you can see on chart. But interestingly, we're having a look at an infographic provided by the best performing iron ore company on the ASX this month. It starts off by explaining the difference between the different types of iron ore. So as you can see on screen, it's got magnetite as the future of iron ore, and many companies have been referring to this as the greener solution, which seems odd because we're talking about large open cut mines and massive fossil fuel extraction from the world, and also expenditure to turn this into steel. So we're going to explain how that actually becomes sort of a green aspect. So we work through the infographic because what we're looking at is just how much iron ore is actually contributing to the global economy, because it is one of the most important commodities in the world. And if it were a country itself, we often hear is California being a massive state in the United States, but if it was a country, it would rank very highly. We hear that about Western Australia against the rest of Australia. But if we look at iron ore itself, they're saying that it would be the 24th largest country in the world with a GDP of 512 billion in 2011. That's 10 years old, that data. We now know currently that iron ore prices are at record highs, so it may be even higher. Now, what we know is that iron itself accounts for 95% of the metal produced per year over the world's developing economies. And the driving demand is moving exponentially. We're looking at 1.1 billion tonnes in 2011, and then that's moving up. It's forecast to be 3.5 billion tonnes in 2030. Clearly for iron ore miners, that's a very positive movement because there's continued demand. So these greenfields and brownfield projects coming to market do have a long life ahead of them. Now we're looking at the differences between the two different types of iron ore here, because there's growing demand for the difference with the magnetite iron ore as opposed to what has been more favoured. So magnetite ore has long been the source of domestic iron supply in North America, Europe and China, is now increasing relevancy across the globe, because there was a perception previously that magnetite ore is inferior substitute to hematite ore that is now firmly changing. And we'll look at that to see the differences between the two. We'll start off with hematite, which gets its name from the colour, which is sort of a blood red colour. We see that often when we see footage of massive ships or the ports over in Western Australia pouring out iron ore into the ships, and it's a red colour. You can see that on screen, sort of a red tinge, which is where the hematite name comes from. Now, generally, you're seeing between 56 to 64% of that hematite ore actually has the iron in it. So iron content of 56 to 64%. And that when it's that quantity or that quality, it then becomes a DSO, direct shipping ore. That's where you're seeing it come out of the terminals, going straight into the ships to go to sea, to go to port. Now, DSO can be shipped immediately to blast furnaces for iron and steel production with little costly processing. That's why it's been favoured to date, and we'll get to why that's changing in a minute, just before we finish on the DSO side of things. But because of this massive demand for DSO, we've really begun to exhaust that high-grade quality assets, and it's becoming questionable about where that supply is going to come from. And in response, explorers have really begun to target the other types of iron ore, which is namely magnetite. And that's how we move over to this side of magnetite. Magnetite has different properties, and namely it has the magnetic aspect of it, which is where it gets its name from. Because magnetite and hematite does not have the magnetic aspects, whereas magnetite does, and that's where the name comes from, due to how its different crystal structures are formed. So the magnetite is the most magnetic mineral found in the natural world, and magnetite ore typically has much lower iron content than the hematite. So when you're pulling it out of the ground, we're talking about 25 to 40% iron content, as opposed to hematite, which has the DSOs of going 56 to 64% straight to market. So it must be concentrated before it can be used in iron and steel production. And this is where it becomes where the expenditure equation, the full green aspect of iron ore and steel production comes in. So the concentration takes advantage of the magnetic properties. So through the magnetic use, the powerful electromagnetics help separate the magnetite from the waste rock. That's a crushing process and does consume energy, what we'll get to in a second, and is an extra process before it gets to market. Quickly, before we progress, magnetite is actually found naturally in organisms. So we do know that honeybees, homing pigeons, and dolphins all contain magnetite in their brains. So that's an internal compass, or it helps with their internal compasses that allows them to navigate over long distances. They're naturally found in organisms, but what we're looking at is the extraction here. So what we're looking at is there's that extra cost in the magnetite to bring it to market to get it into steel and blast furnaces. But despite that extra cost, the upgrading the magnetite, there are actually advantages within this process. So when you go through that process of upgrading the magnetite and the electromagnetic to separate it from the waste rock, it leads to consistently high iron content for the exported material or extracted material. So DSI's iron content can vary depending upon where it's pulled out of the ground and the quality at the time. So what we see shipping out of the terminals at the ports into the containers will vary from ship to ship. But what we do see is more consistent through the magnetite process. So magnetite, you can see on this chart here, you're consistently getting around 68% iron content, whereas the average gauge of hematite in the Pilbara in Western Australia has been reducing. So from 98, it was much higher, and then the quality has been steadily dropping throughout to the period of 2008 where this data shows. So that magnetite concentrate is a premium product consistently at 68% iron. And as a result, magnetite concentrate is suitable for the production of premium quality iron and steel. Now we have a look at the premium quality iron and steel and the carbon emissions that work into the process of creating the iron and steel. Because magnetite concentrate purity and high iron content translates to lower carbon emissions during the iron production in comparison to the DSO ore, which is a DSO ore, or the hematite that we saw here, the blood red that we often see on the news. From a life cycle analysis by the Cubicle Group produced the following numbers. On a per tonne of magnetite concentrate, we see that it takes 64 kilograms of CO2 to get the concentrate the magnetite. That's the first stage that we're talking about with the electromagnetic process. But what it does is it generates 172 kilos with less emissions than DSO, which is the old fashioned of what we're seeing, the grades dropping over time. So that may well actually increase as we're depleting those high grade resources. So what happens, 170 kilograms for DSO, 64 for this CO2 generated for the concentrate magnetite. And then that leads to a net reduction of 108 kilograms of CO2 using this process of what has previously been known as an inferior type of iron ore. Definitely inferior of getting it to the market straight away, but when we look at it in a green perspective and what's happening globally with the talk of green, with Australia possibly being penalised for the type of fossil fuels that we're generating and how we work in that supply chain in future for global green taxes or CO2 emission taxes, this is becoming more and more important. So that's why we're looking at the differences here, and we'll note this in the top 6 that we'll move over to now to understand how they're performing. Again, we're coming back to the iron ore chart that you can see on screen. That is that massive rally you can see on screen. They came from 229, quickly down to 191, and then hitting down to 183, have rallied up recently over 220, and then the recent close is just under 220, 217. That's that volatile movement within the last month. And that puts into context what we've seen with BHP. So we'll bring that chart over there. BHP is down 5.7% for the month. Rio Tinto, you can see a similar move here, had its recent highs around the iron ore prices, and then has dropped down to 125. And then Fortescue Metals, similar aspect here. We are seeing massive broker upgrades for the possible dividends because these prices over $150 a tonne generate massive profits for the companies that can be pushed out through huge dividends. So many investors are expecting that from these big 3 iron ore miners. Now we move over to have a look at the top 6 miners on the ASX in the last month. What we're going to start off with is Freehill's. FHS is the ticker. And we do see that their performance has been 8% for the month. When we bring through and want to have a look at how Freehill Mining describe themselves, you can see there on the chart, they have dropped dramatically and they have participated mildly with this rise. They do describe themselves as they focus on iron ore, magnetite, which we've just looked at, copper and gold resources in Chile. Different exposure from when looking at the tax perspective, but that Freehills have been the 6th best performer at 8% gains. Now, I do see that they have fallen dramatically, and that's not been reflective of what we've seen the iron ore price do. So definitely a small cap anomaly working here. And the second place goes to MGT, which is Magnetite Mines. As the name suggests, we're looking at Magnetite once again. Very solid share price. You see the gains from 1 cent some 6 months ago. High tight flag created 2.5 cents. You can look for tutorials on how to trade that. Click on the link in the below. Then we see another one create up here and then break out over 6 cents to where it is now over 7 cents. That's created 11.7% gain over the last month. Now, the company is iron ore focused, most definitely, and they're a mineral exploration for magnetite iron ore in the Mawson Iron province of South Australia, being the company's flagship projects are the Razorback Iron and Mawson Iron project. Get those on screen so you can have a look to see what those tenements look like. So early stages for them, but that's what they're working on with the magnetite aspect of iron ore. We then move over to Mindax. So Mindax MDX is the ticker, and we want to see that's a 13% gain over the last month. Definitely been a massive explosion to see as the iron ore prices were shooting. This share price shot up, trading around 3 cents over 21, 24 cents, came back down, stabilized, and has been trading sideways churn under that 9 cent region, sort of the 7 to 8 region. Now, what we want to have a look at Mindax is to see how that company describes themselves, because this is critical to how they're rolling out. They do have iron ore and gold, so that is the company's exploration projects. And each of the projects are based in Western Australia. Now, they position themselves for an impeding magnetite revolution, which we've just looked at from the understanding of the greenhouse gas emissions and the depletion of the old hematite ones. Now, the company is also building on previous exploration success to develop its gold project. So that's another aspect, another iron that it has in the fire. But what they're working on is the Chinese steel mills are becoming increasingly hungry for that low polluting magnetite after the concentration they've used, rather than the DSO that we've seen so much of before and help buoy both the Australian and Western Australian economies. Now, strategically, the Chinese mills are moving to plan for this outcome. And the Mount Forest magnetite deposit that they have, that Mindax has, is well positioned to take advantage of existing or new port capacity in the Midwest coast. Mindax's vision is to unlock the value of iron ore assets in the Midwest region of Western Australia through the establishment of large-scale infrastructure that will hopefully lead to positive legacy and enduring economic benefit to Western Australia. That's a long-term project thinking there. Many are thinking back towards Fortescue Metals some 2 decades ago now in those early stages. But that's provided them the 13% gains that we have seen in the last month. Now we move up to BCI, which used to be BC Iron, now BCI Minerals. That's a 25% gain over the last month. Now, BCI are that Australian-based company that are developing both salt and potash in the Pilbara region. That's obviously Western Australia. And the company's been supported by their iron ore royalty earnings from the Iron Valley Iron Ore Mine under the terms of their iron ore sale and purchase agreement. So that is how their exposure to this rapidly moving iron ore project and iron ore commodities are filtering through to the company's bottom line. So that is help financing their salt and potash tenements that they're bringing out. You can see the share price moving from 3 up to 6 within the last 2 months, and a bit of a consolidation just over that 4 cent region recently. So that's number 3 for the month. You can see BC Iron's old name, BCI Minerals, but they are focusing on those other projects, salt and potash, that are coming through. Now we want to see number 2, RHI, which is Red Hill Iron, 25% gain over the month. You can see that in the column on the right-hand side. RHI, as they describe themselves, as iron ore and gold and base metals explorer, whose activities are concentrated in the West Pilbara region of Western Australia. Little surprise to those who are concentrating in the iron ore markets, Western Australia has great tenements. Very low liquidity, very small company, moving from 0.4 cent to 1.2 cents recently, very low liquidity. So we're going to move through that one very quickly after a quick look at their website to see what they look like. But the project map you can see on the right-hand side is that mid to northern part of West Australia. Finally, Iron Road is the one where where we received the infographic from, which is what they've worked through, and that's what you saw earlier. Iron Road performance over the last month, IRD is their ticker, has put on 28%. You can see that on the right-hand side. IRD have 100% owned of their Central Iron project. So what they call a long life iron ore mining with the beneficiation and infrastructure development of the Eyre Peninsula. This is critical to getting it to market. So that Eyre Peninsula is in South Australia, and they're looking for high quality iron concentrate product from the project and they've demonstrated that they can assist with the steel mill customers and lift productivity and better manage their tightening environmental standards, which is why we have this infographic that we've just looked at and worked through to see and understand the differences between the two different types of magnetite and hematite iron ore that we get to market. So what's happening in the West Australian port, the South Australian port, is that they've planned the facility for Cape Hardy, designed by South Australia's first Cape-size capable port, and they'll develop in a number of stages. The first stage, or stage one of the port, is development of the predominantly for grain export down in South Australia, with third-party access for the import and export of various other commodities. Infrastructure Australia has identified the potential for Cape Hardy to ultimately integrate to the Australian National Rail Network, which would provide the basis for world-class multi-user bulk shipment port that can service central and southern regional Australia. Further, their long-term opportunities for Cape Hardy revolve around its proximity to large-scale renewable energy resources and potential for green hydrogen development. Many Australians know that the South Australian energy supply story is quite a political one, but this is a long-term project that they're looking for. When we bring this out to have a look at their performances over the last quarter, you can see that the best performers have been Mindax, 330%, Hill Iron 112, BCI 66, Magnetite Mines 51, Iron Ore itself has put on 27%, RIO's trailed at 11, Fortescue 10, BHP 4, and then the two smaller ones, Iron Road -3 and FHS Freehill -5. Bringing this out on the yearly side of things, Freehill down 37, RIO 28, BHP 33, Fortescue 58, Iron Ore, the commodity itself, 74% gains over the last year. BC Iron Minerals, the old BC Iron, 125% gain. Iron Road that we've looked at with the hematite and magnetite differentials in the infographic, 128% gains. Hill Iron, 217%. Mindax Resources, Mindax Limited, 330%. And the leader over the last 12 months is Magnetite Mines MGT, 344% gains over the last 12 months. They're the top iron ore miners on the ASX. Bit of a science lesson to deep dive there. Again, like the video to support the channel, click subscribe for updates and comment below to let us know which hematite or magnetite iron ore miners you're trading.